D-Street extends losses with the Nifty falling below the 25,700 mark and broader indices trading mixed. Consumer durables, pharma and real estate are the biggest drags while financials and PSU banks hold on to gains. An inline set for TCS with the net profit falling nearly 12% due to an exceptional loss. Margins stayed steady at 25.2%. Deal wins came in at $9.3 billion and the company declared a hefty 57 rupees per share as dividend. Management flagged cautious demand but strong momentum in AI-led projects. A good quarter for HCL Tech as the IT major beat expectations on revenue and EBIT while net profit slipped due to new labor laws. Deal momentum remained robust, led by AI contracts as management raised FY26 services revenue guidance and stayed confident on AI-led growth. It's all about IT as the street expects a modest sequential growth for Infosys. Investors will watch commentary and tech spends, large deal momentum and enterprise AI adoption, while concerns linger around potential revenue risk from the Daimler contract. Bloomberg has delayed India's inclusion in the bond index, saying the market feedback shows broad support but infrastructure gaps remain. The review will remain open with an update due by mid-2026. Any inclusion will likely be phased with at least a one-year lead time. Eternal jumped 3.5% on expectations of higher passive inflows after foreign ownership fell sharply below the FDI cap. The stock currently carries just a 0.5% weightage but is eligible for a potential hike to a 1%, which could trigger nearly $390 million of inflow. Hello and welcome. You're watching Closing Trades here on ET Now. As I did mention, the Nifty is under a bit of pressure, 0.5% lower on the Nifty 50 index. We've shaved 140 points odd versus yesterday's close. It's been a choppy market. It's been a difficult market. We started in the green, but we've lost out on all of those gains. And we're currently sitting very, very close to the day's low of 25,627. That's the day's low. So we're just about 20 points 20 points higher from that point. Let's talk about the advance decline because the breadth, which was strongly in favor of the advance at the start of the day, has receded now. We're almost 1:1 where the advance decline ratio is concerned, but the declines have outstripped the advances by just a wee bit. Largely 1:1 is what we can see. In terms of the index itself, the Nifty 50, you're seeing ICICI Bank being one of the key gainers along with Eternal, SBI doing very well for itself, ONGC also chipping in. But in terms of the losers, it's Reliance, some of the heavyweights really pushing their weight behind the Nifty and making it move down 140 points. Out of that 140, 80 points are contributed by RIL and L&T alone. Negative 82 points is what they're contributing at this point. So L&T also is the other culprit in trade, 4% lower on L&T. Bharti is the other one, which is pulling the index down. ITC, Trent are just some of the other culprits on the index. In terms of the top gainer, surely has to be Eternal. But ONGC outstrips Eternal on that count. 3.5% higher on an ONGC, 1.6% on an ICICI Bank. Tech Mahindra is doing very well for itself within the IT pack. That one is up around 1.5%. Trent is the top loser on the Nifty 50 index along with L&T, 4% lower on both of those. Interglobe Aviation, DRL, Geofin outside of Reliance. Those are some of the big names which are contributing to losses on the index itself. Let's talk about the broader markets as well. The Nifty mid-cap largely in tandem with the Nifty 50 index, 0.6% lower, but the Nifty's small-cap index is on in a zone of its own. It's around a fifth of a percent higher in trade today. So that's where you're seeing some bit of the resilience come in trade. In terms of sectoral winners and losers, you're seeing good traction on the Nifty PSU Bank, decent day of trade, 0.25% higher. Nifty Finance, Nifty IT clinging on to green, if at all I can call it that. There you go. The Fin Nifty is just about clinging on to green. The Nifty IT on the back of both TCS and HCL Tech. I wonder what that one is doing. Likely in the green. There you go. Just about clinging on to green, and has been so for a better part of the day today. When you're looking at some of the big losers, the defense index is down around 1.6%. Realty index is down over 1%, and this is despite the Nifty small cap index doing well in trade. So that divergence playing out. The Nifty pharma index is down 1% as well. The Nifty auto is down 0.8%. The consumption index, the FMCG index, the oil and gas index, and the Nifty metal. Nifty metal, while in the red, but is largely flat. But nonetheless, those are some of the key losers, key laggards in trade among sectoral indices. You look at the move on the Nifty metal, it's sitting at the day's low, and from the high of the day, it's lost nearly 150 odd points. So that's something also that you want to keep your eye out on. In terms of stock specific action, Rabinder here with the list of counters which are buzzing in trade today. Of course, I'll add to that, but Rabinder, what are those stocks on your radar?
Well, as ICICI Pru Life is in focus on the back of the good set of number in the Q3 FY26, where company reported a AP at rupees 2,525 crore, which saw an uptick of more than 3.5% year-on-year basis. And if we talk about the VNP, then company's VNP has increased from 517 crore to 615 crore year-on-year basis. So back of the good set of number in the Q3, ICICI Pru is in focus. Apart from this, Oriental Hotel is also in buzzing on the back of the strong set of number in the quarter gone by, when the company reported a profit at rupees approximately 21 crore with an uptick of approximately 44% year-on-year basis, and EBITDA margin also saw an uptick from 28.4% to 29.9%, and revenue saw an uptick of 14% year-on-year basis. So back of the strong set of number in the Q3 FY26, Oriental Hotel is also in focus, and the stock is up around 5%. Omax is also in focus, where company has invested rupees 500 crore in Ludhiana to launch mixed-use Omax stock project. So back of this, Omax is also in focus. JSW Infra is also in focus on the back of the positive brokerage note, where HSBC has upgraded the stock to hold from the reduced rating and high target price rupees 280 as compared to earlier target price rupees 240. So back of this bullish note from the HSBC, JSW Infra is also in focus. And lastly, Canara HSBC Life is under pressure, where companies like IPO lock-in period is ending today with 4% of the equity. So back of this, this stock is also under pressure.
Okay, so you can see that stock under pressure, Canara HSBC Life. So those are just some of the names for you. Let me quickly try and pull out some more names which are in focus on the back of earnings, due to which you will likely see a movement. Kalpataru is up around 5% odd on the back of the kind of numbers they've disclosed. Well, unenthusing set, but Kalpataru is up. Just Dial, earnings awaited. We'll wait and watch. Tata Elxsi is the other one where earnings are awaited, and you want to keep some of these names on your radar as earnings start to trickle through for these counters. Very quickly on the Nifty 500, I want to quickly mark out the Nifty 500 is down around 0.5% thereabouts. So what you're seeing is the advanced decline is skewed in favor of the declines. HEG, Dixon, Graphite, AU Small Finance Bank are some of the key culprits. Vodafone Idea, L&T, Trent, all of them making it to the list. L&T and Trent, Nifty 50 counters, mind you viewers. Signature Global has shaved off another 3.5% on the very weak update that it delivered earlier this week. Maharashtra Scooters, though, perked up 5%. Alkyl Amines is up 5% as well. Motilal, Oil India, City Union Bank, after the kind of pullback it saw yesterday, is up another 4 today. ITI is up 4. PVR Inox is up nearly 4%. So those are just some of the names which are doing fairly well in trade. But let's shift focus to IT, and within that IT basket, what we really noticed was the fact that some extraordinary items seem to have brought the profit after tax number well below estimates, despite the companies delivering a decent EBIT number and even better EBIT margin than the consensus estimates. To understand this accounting angle better and to try and understand what the impact across the board could well be, not just Nifty but across the board, we have Charanjot Singh Nanda. I beg your pardon, sir, if I've got the name wrong. Charanjot Singh Nanda, the president of the ICAI, who's joining us. Sir, great having you here. First off,
Thank you.
give us some color on what the accounting nuances are with regard to the new or the changed labor laws. This is Harsh here, sir, by the way. So first, give us a sense of what this means from an accounting standpoint, and why account for all of it in Q3. Is there a provision where one can stagger it over maybe the next 4 quarters?
I would like to just give you a brief overview.
Sure.
The new labor code, which consolidates 29 existing labor laws into 4 comprehensive codes. So if you go ahead, you will see that largely if the wage is 100, if the salary is 100, your wages compulsorily have to be 50. And therefore, the gratuity amount payable will go up. And in this regard, the Accounting Standard Board of ICI has issued a set of FAQs clarifying the key accounting implications arising from the implication of new labor codes in India. This is effective from 21st November 2025. The first issue which you said, that would there be prudent to stagger such expenses? No. The impact is as on today, as on 21st November 2025. Therefore, the increase in gratuity liability or other benefits arising out due to application of the new labor code is a past service cost as a result of changes in the benefit payable under the plan, and therefore it has to be accounted in accordance with the applicable accounting standards, which is AS 15 and Ind AS 19 of employee benefits.
Perfect. And therefore, this impact will be felt across corporates in this quarter itself. Will this basically be...
The only that if you are preparing quarterly accounts, you have to disclose it and you have to take the cognizance quarter 3. If it is not so, then you have to go for annual accounting, annual financial statements, the impact has to be shown. So it has to be in the current period only.
And would a tax deduction for this be available under the Income Tax Act, sir?
No. It is as applicable, which is going on, but nothing new on this account.
Understood. Okay. And talk to us about what this does going forward. Is there a ballpark percentage of employee costs that one can try to extrapolate? Because, sir, we're linked to markets, so I'm trying to understand whether one can try and extrapolate this number in some fashion. Is it a percentage of the employee cost, or is it completely computed company-wise?
Basically want to understand about materiality.
That is correct.
That AS1 speaks of materiality. As per AS1, information is material if omitting, misstating, or obscuring it could reasonably be expected to influence decisions that the primary user of general purpose financial statement make on the basis of those financial statements. The meaning is that if that is omitted, there is no major impact, but this is up to the company to take a call. Materiality has to be taken by the company, and ICI or accounting standard does not prescribe any quantitative thresholds for materiality.
Accounted for under extraordinary items, sir?
No, it is not an extraordinary. See, they may have said this, but in my opinion, it is not an extraordinary item because it is a liability which has arisen now. Although due to incidence of a regulatory compliance, it has now been created. So when it is created, it has to be accounted for.
I understand. This will also, Mr. Nanda, impact the numbers going forward, because you will have to typically provide for a larger gratuity quantum, I understand, going forward as well. What would that component broadly be? Is it 1%, 2% of employee cost? Is there a back of the envelope maths that one would have done in terms of what the impact could be?
It is not possible to do so, Harji. There
Understood.
is no such benchmark, there is no such pointer where you could identify what is the percentage. That at the end of the period you can see, compare it with the previous year figures, but as of now you can't do it. And it will not be uniform across all the sections of the companies. It will be different from different companies.
I fully understand that. Right, Mr. Nanda. Mr. Nanda, any other nuances with regard to the labor code which one needs to keep in mind according to you?
I would just like to say that certain section of society is asking that if any restatement is required to be made in historic value or periods. So in this regard, I want to clarify that since the impact of new labor code is arising in the current year, restatements are not required in comparative figures. Also, entries preparing interim financial statements for the third quarter, I again repeat, is a very important question on which we have received so many queries. Entities preparing interim financial statements for the third quarter are required to recognize the increased liability in the interim period. Other entities will show the cognizance in annual financial statements. Otherwise, you have to live with it. It is something which has been created. I understand that the impact on gratuity will be huge, but you have to take that to the company.
Excellent. Mr. Nanda, thank you so much. We've tried to obviously cover as much as possible, and we've also asked you a residual question. I hope that we've covered enough with regard to the labor code and all the clarifications that you wanted to make.
One thing at the conclusion, I'd like to say that we have the FAQs of ICI ASB, Accounting Standard Board. Anybody can visit our ICI.org and look at the FAQs. Thank you.
Yes, we have done so, Mr. Nanda. Thank you so much for joining us and giving us this clarity, sir. All right, and viewers, with that, what we'll do is slip into a very, very short break. But it's very evident that the impact of this will be felt in Q3 FY26. Not as extraordinary items, viewers. Mr. Nanda has clarified this will be treated as employee costs. Of course, TCS and HCL Tech in particular have disclosed it as an extraordinary item, largely to underline or to differentiate that their EBIT margins on a steady state basis haven't gotten diluted. But broadly, Mr. Nanda's view seems very, very clear that this is not an extraordinary item, will be accounted as per normal accounting practices, and therefore what you will likely see is an impact of that across the board, in Q3 FY26 in terms of the numbers. Viewers, will slip into a very short break. On the other side, we'll continue with coverage here on ET Now. Stay with us.
Fly Emirates, fly better.
अरे टेंशन किस बात की? सेंचुरी प्रोबूट का प्रीमियम प्लस है ना, लो एमिशन है, हाई डेंसिटी है, वाटर रेजिस्टेंट भी, टर्माइट एंड बोरो रेजिस्टेंट भी है। यानी ये है जहां नो टेंशन वहां।
Premium Plus by Century ProWood. Presented by Aegis Federal Life Insurance, हर वादा मुमकिन. In association with SBI, the banker to every Indian truly.
AU सेविंग्स अकाउंट में मिलते हैं अमेजिंग बेनिफिट्स, पेपरलेस बैंकिंग एंड हायर इंटरेस्ट, वो भी हर महीने।
मनी 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 एवरी मंथ।
सोच बदलो और बैंक भी।
आदमी एक बार जीता है, एक बार मरता है, पर बीवियां बार बार ज्वेलरी खरीदती हैं। एक बार किटी के लिए, एक बार पार्टी के लिए, एक बार वेडिंग के लिए। ऑल थैंक्स टू कैंडी, लाइट वेट एवरीडे ज्वेलरी।
सर रोक तो आप भी नहीं पाएंगे, ट्राई कीजिए।
ओह वाह, सब पे दिल आ जाए तो
मल्टी लेयर पहन लीजिए।
ये मुझे चाहिए। Oh my God, this is so. देख क्या रही? मैं भी तो यही कह रहा था. ज्वेलरी सबके लिए होनी चाहिए. Candia, lifestyle jewelry.
Anytime is a good time for multi-asset allocation funds. Invest in a mix of equity, debt, gold, and silver through one fund.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Rohit,
Yes, sir.
we need to talk, okay?
That's Air India now.
Motorola, India's leading AI smartphone brand.
Welcome back, and time for a market conversation. Aniruddha Naha, CIO Alternates at PGIM India Asset Management Company, joining us. Aniruddha, great having you here. Of course, let me first start off by understanding from you how you're looking at the current market landscape. There's likely to be an earnings re-rating. CPI inflation has come in, of course, but it's come in slightly higher than expected. A lot of it is imported inflation that we are facing. At this point, how are you looking and how are you assessing the way markets are doing? Are these opportunities to buy at this point?
Thank you for having me here. What we clearly see is there are pockets where, because of price correction, clearly it is giving us an opportunity to start building into portfolios. Not only that, along with the price correction, in some of the segments across the market, we've actually seen earnings starting to get better. So there is a double positive playing out where you've got prices lower as well as earnings coming through. And we remain incrementally more positive on how things will play out into the next financial year. I think this will be a base quarter where, as you were discussing, there would be certain impacts which will hit businesses across a lot of sectors. But once that gets built in, I think incrementally into the next financial year, you would have hopefully lower raw material costs coming through, as well as growth on the top line side coming through. So we would be reasonably positive and would recommend building positions or building portfolios into the next 6 months.
In what pockets are you finding, what sectors, pockets are finding favor with you? Talk to us about that first.
Sure. We're closely looking at auto ancillary. That's been one segment. I think previously also we had discussed, chemicals and agrochemicals. Clearly, there seem to be some positives coming out of China, and that would benefit the commodity end of the markets. I think commodities per se and metals would be the other segment where we believe there is reasonable amount of money to be, or at least the valuations are definitely on your side. And finally, discretionary consumption is something that we believe into the next pay commission revision that comes through into the next year. That should be reasonably helpful in terms of driving demand.
Okay. Aniruddha, the PSU banking counters will come into focus. Earnings have started to trickle through. When I'm looking at Bank of Maharashtra's numbers, and they've just come in as we speak, 16% growth on the net interest income number. You're also seeing provisions largely steady in terms of credit costs. GNPAs and NPAs on the decline or continue to remain on the decline, and profitability continues to rise. 27% profit growth that Bank of Maharashtra has clocked. I'm not talking to you about stock specifics, which is not the Bank of Maharashtra itself, but talk to us about the PSU banking pack as a whole. Do you believe that the re-rating story has now completely played out, or do you believe that there's still some leg to go? And if so, how much? Ballpark, 20, 30, 50, doubling from here. What's the sense like?
So rather than taking a price target, what we definitely feel is at least into the next 3 to 4 quarters, you are not going to see anything which will be detrimental to the sector. You will have a lower base and hence growth will look good. I think the asset quality issues, if it at all plays out, will play out probably 3 or 4 quarters down the line. And hence, at least into a market where a lot of sectors are finding it difficult, this probably would be one sector you would have valuations on your side, the comfort of valuations, as well as the fact that asset quality and growth is there. The only thing one needs to be keep a close tab on is whether there is any dilution that suddenly comes through in this sector. As long as that doesn't happen, I think so. This is a good sector to be in for the next 3 4 quarters at least.
What we're getting in terms of news is that that Blinkit has dropped, and all of the quick commerce delivery platforms have dropped their 10-minute delivery. They've been told to roll back on 10-minute delivery. In fact, what we're seeing on Eternal is the stock was up 3.5 to 4%, currently up just 2% in trade. So we're seeing, let's quickly pull up the stock chart of an Eternal, because they've been told to basically drop their 10-minute delivery. Well, stock chart not reflecting much, frankly, but it was up nearly 3.5 to 4% earlier in trade, and we're seeing a bit of a pullback with regard to that. So I don't know what or how this is going to impact them, but a certain impact. If 10-minute delivery is dropped, what is likely going to be the next rollout in terms of what's permitted? Is it going to be 30-minute delivery? Is it going to be 1-hour delivery? And what's the kind of competition that's going to play out? Because now you've got dark stores already set up by some of these quick commerce giants, and they've been set up to enable a 10-minute delivery. Now, with that being dropped, I wonder what happens. Is there more optimization to be done with regard to dark stores? Very, very likely that may be the case, but this is basically a very, very big development. Union Minister has persuaded major delivery players to remove the 10-minute delivery services. And that also is the key, basically. And how do dark stores really evolve will be the key question thereafter. Snehi is here, in fact, with more. Snehi, what are you hearing?
Sources, and also we understand from ANI and Times now that following a series of sustained interventions, the Union Minister Mansukh Mandavia has persuaded major delivery aggregators to remove the 10-minute delivery deadline. Remember, this is one of the big asks of the groups and the organizations that had called for the strike on Christmas Day and New Year's Day in 2025, so that's just a few days ago in December, and this was one of their major asks other than social security benefits. A meeting was held with leading platforms including Blinkit, Swiggy, Zepto and Zomato to understand concerns related to the delivery timelines. Blinkit had already acted on the directive and removed the 10-minute delivery promise from its branding. This is something that has already happened. Other aggregators are expected to follow suit in the coming days. The move is aimed at ensuring greater safety, security and improved working conditions for gig workers. And as part of this change, Blinkit has also updated its brand messaging. The company's principal tagline has been revised from 10,000 plus products delivered in 10 minutes to now 30,000 plus products delivered at your doorstep. So this is one of the big updates coming in. And in fact, I also spoke to the organizer of the strike on 25th December and 31st December, Mr. Sheikh Salahuddin, the founder and president of TGPWU and the national president secretary of the IFAT, who is in charge of the strike, and he has confirmed to us that yes, indeed, the Labour Ministry has come out with a notification, and this persuasion has come from the Labour Ministry directly to some of these platform aggregators who provide 10-minute delivery service. So yes, it's a win coming in from the gig workers side, but yes, this was one of the big asks back then, and now this seems to have been fulfilled. Back to you.
This is big, Snehi. Stay with us, because what this will likely mean is there'll have to be a rejig with regard to the dark store format that they follow. The current dark store format requires them to have a dark store within a certain radius. That radius might just go up as a result. Stay with us, but we have Times Network's Karishma here for more with regard to what she's hearing. Karishma, what are you hearing? Good
Well, Well, yes, what we're given to understand is that this has happened because of intervention of the Union Labour Minister, Mr. Mansukh Mandavia. And what we are learning from our sources is that a meeting was held with Blinkit, Zepto and Zomato and Swiggy to address these particular concerns that are related to this quick delivery setup. Now, Blinkit has already acted on it and removed the 10-minute delivery from its branding, from saying that 10,000 plus products delivered in 10 minutes. It says 30,000 plus products delivered at your doorstep. So this branding has now been changed by Blinkit, and all other quick delivery setups will also have to follow suit, because questions were being raised on what this does for the delivery boys. Other aggregators are also expected to follow suit in the coming days, is what we are learning from the Labour Ministry. The move is aimed at ensuring greater safety, security and improved working conditions for the gig workers, because this was also a major concern that had been raised earlier, and now that also has been addressed by this meeting between the Union Labour Minister and Blinkit, Zepto, Zomato and Swiggy. So obviously it is aimed at better protection for these gig workers.
Thank you so much for that, Karishma. Sneha, I wonder what happens with regard to dark stores.
Well, yes, Harsh, so that's an interesting way to look at it, because dark stores are required to be within certain kilometers in a very busy hubs, in very busy and very thickly populated residential areas, and that is the reason why they were able to meet this 10 or 12-minute deadline that all these apps have internally set for themselves. Just talking about what the dark store guidance is for both of these companies, first of all, if you talk about what Zomato has said, that they are going to be reaching 2,100 stores, by December 2025, versus their earlier guidance of 2,000 stores, and they've also hiked their dark store guidance for March 2027. Now they're aiming for 3,000 stores. So it's going to be very important to now watch out for what the what the dark store trajectory is going to be for some of these names, what the expansion plans are going to be over here, if at all they need so many dark stores now that this 10-minute delivery model has been rolled back. For Swiggy too, they added 40 stores in the second quarter, and they've also guided that they are going to be increasing their per square foot throughput that comes out of all of these stores. So these metrics are also going to be very important to watch out for. And yes, what the dark store growth trajectory is, what the plans are for expanding into tier 2, tier 3 cities, and of course in metros too, now that this 10-minute delivery model has been rolled back, is going to be very crucial. And of course the impact that it has on their financials, how else could that money be used, what are other expansion plans. So this actually opens a whole new can of worms, but yes, lots to watch out for on this front.
Okay, thank you so much for that, Sneha. We'll continue to monitor that situation and try and maybe quantify this and understand this better. But this is obviously big. No real impact on the stock prices. Let's pull up a Swiggy as well. Let's see what that one is doing. In fact, that's seen a bit of a crack, Swiggy, if I understand right. But yes, nothing much, frankly, just a % lower in trade post that announcement. So we'll wait and watch as to what the after effects of that are. Aniruddha, you're still with us. Do you have a view with regard to this?
We frankly are going to have to evaluate this. But our sense is we've been looking at these businesses more from a cash flow perspective. And probably this 10-minute delivery did add a lot of valuations to these businesses. So we'll have to wait and see where, frankly, the valuations stack up and what has been actually, built into some of these names. So we frankly don't have a right number to speak to about it. We'll have to evaluate it and probably at some point get back on this.
If I were to just logically decipher this as an analyst and not really try and wear the hat, or I would urge you not to wear the hat of a CIO and just wear the hat of an analyst. This is negative for some of these companies, right? Because it will likely mean that they will have to reduce their footprint now. And given that they've already built an existing footprint, they'll have to dismantle that to a certain extent to optimize, right? Is that the right way of thinking of it?
Yes, I think so. You're absolutely right. I think so. Not only that, I think more from a valuation perspective, if I was to look at it, I think so there was valuation being ascribed to the fact that this 10-minute delivery, basically you are churning your assets. The employees or the delivery people would have been your assets. You are churning or delivering more in the same period of time. That starts coming off. So incrementally, my belief would be it would have an impact on ROEs. We'll have to wait and see what kind of an impact it has on cash flows. But it is definitely something which has come as a little bit of a negative surprise for the industry.
Okay. Aniruddha, thank you so much. We'll let you go. It's a truncated conversation, but it's a busy day, as you can see. So we'll let you go, but we'll probably get you back and have your views very, very soon. So thanks for coming in and speaking with us. And viewers, what we'll do is slip into a very short break. We'll continue conversations on the other side. Stay with us. Welcome back. We're joined by Shivangi Sarda from Motilal Oswal Financial Services to talk to us about technicals and how she's viewing markets. Shivangi, good afternoon. Good having you here. Let me first start off with the Nifty. It's been choppy, to say the very least. We've seen one day of recovery, followed by, again, weakness and sustained weakness, followed by another day of recovery, followed by a third day of hitting all-time highs, followed by a fourth day of coming off. What's playing out?
Very good afternoon. Thank you for having me. So we've seen that the indices have been facing a lot of pressure of lately, and there has been quite a lot of rubber from the lifetime high levels in the last 2 weeks. We've seen, of course, there are a lot of global concerns that are, driving the index, and even today's bounce could not be held on to, and we've seen that it has again formed a very big bearish candle on the daily frame. Now, there is a lot of call writers that are still present on the higher side, which needs to unwind their position for the next stability to regain here. But of course, it's the weeks before the budget, so a lot of volatility will be expected here within a range. We are looking at actually 25,500 on the downside as a support, with the upside being capped at 26,000 levels. So these levels would be important to watch out for. Now, of course, Bank Nifty is the stronger out of the two, and we've seen that the PSU names especially have been holding quite a lot of strength, especially the heavyweight ones. And Bank Nifty has actually held on to the higher, band on the weekly basis as well. It hasn't broken any important support levels. It is trading above its 50-daily exponential moving average as well. So 59,000 would be the level to watch out and as a support, and for the upside towards 60,000 and 60,200.
Okay, so that's with regard to the Nifty and the Nifty Bank. Shivangi, your picks for this afternoon?
So definitely we've seen that there is a lot of profit taking in the broader market, but there are some stocks which are resiliently holding on to the higher levels. First up on my radar is MCX. Of course, all the disclosures apply. This one has been one of those stocks which has been driven by the metal, movement of lately. But overall as well, this has been an outperformer from the last 3 years with consistent buying at any small declines. It has been trading in an upward sloping channel consistently from the last 60 trading sessions, and respected its immediate support levels as well. So this one is looking quite positive. We've seen that of course MCX has been one of those stocks which has been resilient even despite the market volatility. So this one's quite strong, and we're recommending this for the next targets of 2350 levels and a support of 2230 zones.
Shivangi, the defense pack has come under increasing pressure today. I'm trying to get a sense as to whether this is a buy on dips candidate, and what within defense are you liking? What would be a good play at this point?
Harsh, defense is one space which has become tricky of lately. Of course, around the budget, we see a lot of momentum gaining here. But it has been consolidating from the last 3 months. And even though the support levels are not being broken, but the upside, follow-up is also missing in some of the counters. So definitely this one's on radar for a short-term trading perspective. Or if someone wants to go really long term on that, but then it wouldn't be a stock that you could buy and hold for a few weeks. But then again, out of the lot, the strongest I can see is HAL, which is kind of consolidating within a narrow band from the last 6 trading sessions, struggling to hold above its key demo. But then again, we've seen that this stock would remain some bit consolidative. So this one could be kept on radar.
Okay. What do you make of the move on Eternal today?
So of course we've seen a lot of news flows in this stock of lately currently, and which is why the stock is gaining a lot of attraction as well. But it has kind of formed a bottoming out structure on the weekly frame, which is making the stock very comfortable. And even on the monthly basis, we are on a verge to negate the lower highs, lower top that we were making. So Eternal is looking quite positive, but now it has to kind of hold above 295, or basically close above 295 for strength to continue here. So we'll watch out for 295 for the next up move towards 305 levels at a support of 285 zone.
Okay, all right. So that's the take coming in with regard to where an Eternal is concerned, one of those big gainers of the day on the Nifty index. Now, I want to quickly also bring in Kunal into the conversation. Kunal, the Nifty PSU Bank today has been resolute, 0.5% higher. Firstly, welcome. Good afternoon. The Nifty PSU Bank has been extremely resolute. I know you like the Nifty, or rather, I know you like the PSU banks in general, but you like the private banks a little bit more. At this point, would you go long PSU banks given the kind of move on the Nifty, given the kind of outperformance that they've shown today?
Absolutely, yes. So I think, as we discussed in the morning also, that it's a good strategy to have a 50-50 balance towards PSU banking names along with the private sector banking stocks, because right now we are at a point of flux where, the private sector banking stocks could, start to, show signs of outperformance, and we are seeing those, outperforming signs. So I think if you remove HDFC Bank largely as a, barometer as such, then I think you look at the names where, the stocks on the private sector banking stocks have behaved. ICICI Bank has done reasonably well in the last 5-7 trading sessions. It's up almost 7% broadly. Axis Bank is more or less in a trading range. Kotak Bank has surprisingly been on the positive side, trading at 2130, 2150 kind of a mark. So the major larger cap private sector banking names, ex of HDFC Bank, I think they've done very well for themselves as an overall basket. And same is the case with the PSU banking names. The best part about PSU banking stocks is the leader in terms of SBI, which is still charging, quite well. The stock is trading just around that 1,000 mark. We've seen good recovery into the stock price. So that, I believe, could be the hallmark or the standout feature which the private sector banking stocks are missing. So bullish on both of these aspects. But yeah, I think, with every phase of the market, you might have a point where you might, the trade might skew towards, one particular sector within the banking names. But then overall, I think both of these, parts of the Bank Nifty should perform very well.
Okay, Kunal, I'll have to pause you there. We're joined by Sudeep Bandyopadhyay, who's market expert, to talk to us about everything that's happening with regard to the 10-minute delivery. Sudeep, great having you. Let me quickly brief you on, and viewers, of course, on and set the context here. Labour Minister has held talks with the platform companies, which is Swiggy, Zomato, Zepto, among others. Platforms have been asked to remove delivery time limits. No more 10-minute delivery promise on quick commerce platforms. The government is set to hold meetings with leading quick commerce platforms to convey this as well. Sudeep, your initial take on this?
Well, I think it's a welcome development. This 10-minute was a category which was developed, not sure for whom. I mean, there was no crying need for a 10-minute delivery at any point of time, and it became a competitive madness, creating hazards for the life of the delivery boys and generally in the road. Because if you analyze the time, how it needs to be processed from the time an order is placed till the time it reaches the customer, I think it's a mad rush. And not sure for what benefit and whose benefit. So removing that, absurd deadline of 10 minutes, I think is good for everybody, including the platform companies. Let there be quick commerce, let there be e-commerce, but there is absolutely no need for this 10-minute madness. I think this going away is good for everybody, for the ecosystem, and eventually for the companies as well.
Right, Sudeep. But Sudeep, what happens next? Companies have set up infrastructure, they're building processes around this. They have built infrastructure based on a certain radius which they can cater to and deliver within 10 minutes. This changes a lot of those investments that have been put in. It's a big change.
Harsh, I don't think anything changes,
Okay.
It's just that, it is quick commerce. So they need to deliver quickly. But this artificial deadline of 10 minutes was creating havoc with pretty much everything. Yes, when I order, I will want it to come quickly, and I will probably select the vendor who delivers quickly. But there is no artificial 10-minute, 5-minute, 7-minute, 15-minute kind of a deadline. It will come quickly, and it should come quickly, but that's about it. So the infrastructure setup will definitely going forward also continue to cater to quick commerce, and quick commerce means just that, quick. It is not e-commerce where the delivery will come in a day or two. It will come sooner than later, but not an artificial 10-minute deadline.
Okay, point taken, Sudeep. And therefore, these businesses can continue to ramp up the way they do. In your opinion, does it change? Does competition come in a significant fashion as a result of this going away and this 10-minute tag being removed, therefore?
Well, I don't think anything changes for these companies.
Understood.
Everything remains same. I mean, they will continue to compete on the basis of their delivery times. Just this artificial 10-minute, deadline goes away. Still, as I said, the customer will, if somebody needs stuff quickly, he will prefer a vendor who delivers quickly. I mean, that has been always the case, isn't it? And it will remain always the case. And quick commerce has a logic and a rationale which will continue to exist.
Okay, Sudeep, thank you so much for that. That's very good perspective. Sudeep, just curiosity. Do you have your bets on any of these quick commerce plays as an Eternal, Swiggy? Is it part of your portfolio?
Well, I do like Eternal, and I have started liking Swiggy as well now because of the valuation comfort I have there.
Sure. Okay. So there you go. That's Sudeep Bandyopadhyay and his views with regard to quick commerce and Eternal and Swiggy. Kunal, on charts, does an Eternal Swiggy look attractive at all to you?
Yeah, they do. In fact, Eternal after today's move indicates that the stock is gearing up for a mild bit of a breakout, back again about that 290 to 95 kind of a zone. Swiggy, on the other hand, I think could be a stock which can be a very good contra bet at current levels, because now what's happened is with the stock at 350 levels and the recent correction from 420 mark, the indicators have started to enter into an oversold territory for Swiggy. So even though the prices have not recovered as compared to, say, comparison with Eternal, but I believe at current levels the risk reward could be favorable for even Swiggy to make a bounce back. So this could be a good risk reward trade for someone who's entering at current levels. I would believe 370-75 could be a modest target which one could eye on.
Okay, so that's with regard to Eternal Swiggy. Of course, Kunal is going to be with us. So is Shivangi. And what we're going to do is dive into a very, very quick break. On the other side, we're going to take up some stocks which are making news. 6% higher in alkylamines. If you look at the stock price today, from the lows of the day, we've seen a very good rally. LT Foods as well, Manappuram as well. We'll chat about some of these counters who have rallied well from the day's low on the other side of this very short break. Stay with us. Welcome back. We continue conversation. We have with us Akash Agarwal, Associate Director, Digital and New Age Businesses at Anand Rathi Investment Banking, joining us. Akash, great having you. How justified is this move, removing 10-minute delivery altogether?
Thank you for having me. I think from there's a way that we have to look at this, right? There are two different angles to this. One is, of course, the entire safety and the earning of a delivery person, and the other is really from a customer lens, whether this promise is required, warranted, and more importantly, actually true or not. So I think the fact that this promise has kind of been diluted, it does not really have an impact on the customer per se, because most customers were used to the delivery times of 10 minutes not being met. Because if you look at average delivery times, they would be much higher than 10 minutes, probably between 15-20 minutes in most cases, depending upon the time of the day. So I think from that front, quick commerce is really not about 10 minutes. It's more of a marketing approach. It is really about getting items delivered to you as quick as possible. And I think now, in light of this, at least that promise is as it should be, which is you will get your items quick, not necessarily in 10 minutes. So that's, I think, a good step.
Required, Akash, in your opinion?
I think very much required. I think because there are two angles to this, right? From a company's perspective, just this 10-minute delivery, which is not standard anyways, is leading to a lot of backlash as well. While the companies, and I've been following companies like Blinkit and Instamart quite closely, they're following all the kind of criteria and rules that they should to ensure driver safety. They're compensating their drivers in what they feel is a respectable manner. And yet, because of this 10-minute promise, the perception is that this is unsafe, this is not very feasible. What people aren't going is digging under the layers and really finding out that the reason these promises were made was because the stores are actually, about a kilometer away from where a customer is. So those kind of logistics that have been created get diluted just because the perception of 10-minute delivery is high pace, high risk delivery. So I think this will not just help consumers and set the right benchmarking, because even companies delivering in 30 minutes were actually promising 10 minutes and with no repercussion. So it will help the customers who will actually understand this is quick and not 10 minutes, and also the companies, because you've actually set the right expectation from the customers who are not perceiving that you're doing something wrong.
Akash, does it change infrastructure at all? Does it change the business model to a larger extent? Are there going to be single warehouses in a larger or black stores in a larger radius? Is that what this does, or not at all, in your opinion?
Absolutely not, because what has simply happened is you will not see marketing of 10 minutes, but when you go on the app, you will still be able to see the number of minutes to delivery. So it might show you 20 minutes, 25 minutes, and then you will, of course, depending on the number of minutes, take a call on which app you want to order on. So that logistical network will not change, because like I said, already it was not 10 minutes. The actual delivery times are steeper than that. It was just the perception that you have. And honestly, from a customer's lens, whether it's 20 minutes or 10 minutes, it really doesn't matter that much. So it changes nothing in the logistical networks. And that's why you're seeing the companies have also proactively taken this.
Right. Akash, I wonder how, because you're a banker and therefore to some extent you may not be entirely related to public markets fully, but talk to us about what or how you tend to value some of these companies, because there's a very large cash burn. That's point number one. Point number two, we're not seeing clear visibility of earnings coming through. How should one look at how these companies are valued according to you? Okay, I believe we've lost Akash. Anyway, so I mean, the take seems fairly clear. It seems clear that the current infrastructure bill does not change at all. So that initial feel that I spoke about clearly being brushed aside. They're saying that there won't be any change with regard to the business model either. It's just the marketing of the 10-minute delivery that goes away. So you will still likely get the delivery within maybe 10 to 20 minutes. It's just that the marketing of it being a 10-minute delivery may not happen. So that's something you want to keep your eye out on. But Shivangi, let me come to you. With regard to alkyl amines, the move in the stock price from the day's low is very, very steep. Talk to us about how this chart looks to you.
We've seen that this steep move was actually reflected on the 8th of January as well, last Thursday, but then it could not sustain at the higher levels. So we're still trading at a very low price, and this stock has actually seen a lot of dampness from the last 6 months. So a lot of follow-up is required for this stock to again regain strength. My advice would be there are better stocks in the same sector which one could focus on.
Amrish Baliga also joining us, independent market analyst. Great having you, Amrish. Sorry, this has been a show which has been all over the place, given everything that's playing out, as you'd well understand. Talk to us about some of the gold financiers, Amrish. We have a Manappuram, we have a Muthoot. Gold has not taken a breather even now. And therefore, gold financiers in focus. But these stocks, especially Muthoot in that sense, are not particularly cheap anymore, right? How should one look at them? Do you believe that this is a multi-year cycle in terms of gold and lending?
See, I mean, till date, we have seen an extremely good move as far as gold is concerned, and because of which clearly the gold financing business benefits because the loan component is much higher than what it was possibly a year back, and that's what is reflecting in the prices of all these gold financiers. But we should remember that at some point of time, history has shown us this, that after this sort of a move, both gold and silver have corrected decently well in the past, and I don't see going ahead that could be different. But it's very difficult to call as to where the top would be. So someone who is invested in Muthoot Finance or other gold financiers, I would say that possibly keep a trailing stop loss, because to take a fundamental call at this point will be difficult. It has got expensive, but looking at the momentum, better to keep a trailing stop loss. And the day the stop loss gets hit, just ruthlessly get out.
Okay, be ruthless about it is what Amrish is saying. Very quickly on charts, Kunal, Muthoot, Manappuram.
Yeah, I think they're still looking very attractive. In fact, there was a phase where Muthoot Finance did very well. That stock took a pause, and Manappuram Finance, I think, managed to pick up pace at the point when the stock was at 260 to 300, 320 kind of a range. I think last couple of days back, there was some negative news flow for Manappuram Finance. But the stock seems to have absorbed that quite well. It's now come back above the 300 levels. I would actually be bullish on both of these names. And my sense is that we are looking at this as a major multi-year uptrend for both of these stocks.
Major multi-year uptrend. What we'll do is slip into a very short break. Continue conversation with all three of our guests. Hopefully nothing breaks, but we will try to cover as much as possible on the rest of the show that we have. Stay with us here on ET. It's the morning, largely on the back of a possible MSCI increase in weightage. Snehi is here to tell us more.
Well, yes, the stock of Eternal is in focus today. First of all, of course, on the back of this news that we've heard that the Labour Ministry has persuaded all of these delivery companies to roll back their 10-minute delivery program. So on the back of that, but secondly, on a more technical front, the reason why Eternal opened also very strongly and continues to do well is because of what the foreign shareholding looks like. Now, last evening, Eternal uploaded their latest shareholding structure, basis which the Eternal foreign holding is now at 36.68%. That's very close to 36.7%, let's call it that. Remember, they have a cap of their foreign ownership at 49.5%, out of which right now only 36.7% is being held. If you take a look at the trend from when Eternal became a part of Nifty 50, when this cap was put into place, when the 49.5% cap was put into place, their foreign holding was around 42.8%, which has now come all the way down to 36.7%. So here's what these numbers suggest. Currently, the stock carries a weightage of 0.5 in the MSCI index due to low foreign headroom. Now, foreign ownership of Eternal fell from 48%, like we told you, to 36.8% right now. And Eternal's foreign ownership cap is currently 49.5%. This is under the Indian FDI norms, like we told you. So, at 36.7%, Eternal now has a headroom of over 25% to meet that 49.5% cap, and this headroom should make the stock eligible for a weightage of 1 versus the weightage of 0.5 that it currently has under MSCI. That is in fact the doubling of their weightage. This change is expected to be reflected in the February MSCI review, and if the weightage is indeed increased to 1, this could potentially result in passive inflows to the stock of about $390 million as per analyst estimates. And of course, this is based on our calculation, this should come somewhere around 1.7 times based on its 30-day daily volume average. So yes, that is also the reason why Eternal is in focus, because the foreign ownership has a lot of headroom to now increase, and on the back of that, the MSCI rejig in favor of the stock could also take place in February.
All right, thank you so much for that, Snehi. That's with regard to Eternal, of course. Ambrish, I wonder what the take with regard to IT is, because you've got a couple of IT companies which have reported earnings. You had a TCS and HCL Tech. Surprised on the upside. HCL Tech more than TCS, of course. But is that largely going to be the story for Q3? You reckon even Infi will likely surprise on the upside?
Yeah, I mean, there could be some surprise on the upside, like what we have seen for HCL Tech as well as TCS. But then again, if you're talking of the next 2 quarters, I don't think, we can see too much of an upside as far as overall IT space is concerned. So I would say possibly utilize this upside to lighten your positions, and possibly you should get most of the stocks at slightly lower levels going ahead.
Okay, let's go across to Ishika. In fact, she's here to give us what the Infi Q3 numbers could likely look like. Ishika.
So Infosys is coming out with its Q3 results soon, and here's what the streets are expecting. They're expecting revenue, EBIT as well as EBIT margins in fact to remain flat this quarter due to seasonality. And some of the key expectations this quarter are that EBIT margins are set to improve, aided by Project Maximus as well as currency tailwinds, flat but and not substantially, however. And revenue may be seen down due to fewer billing days and no prior mega wins. Furthermore, we can expect a material quarter-on-quarter jump in large deal TCV given the mega deal win announcement in October of 2025. And here's what the investors should keep track of going ahead. The CY 2026 tech outlook. Furthermore, they can track pricing pressure and competition in large deals, followed by client willingness for margin dilutive transformative programs, as well as pace of enterprise AI adoption and pricing impact. Another thing to keep track of is incremental benefits coming from Project Maximus. Now, going ahead, we can expect a flat yet robust quarter from Infosys. And they've also given a guidance last quarter. They revised their full year revenue guidance to 2 to 3% in CC terms from prior guidance of 1 to 3%, right? And they also mentioned their full year EBIT margin guidance unchanged at 20 to 22%. Back to you.
Thank you so much for that, Ishika. Shivangi, on charts, Infosys, how does this one look?
So, Harsh, we've seen that IT stocks had kind of gained a bit of momentum off lately, but Infosys has been making lower top, lower bottom from the last 3 weeks. And although it is taking a bit of a support near its 50 DEMA, but overall the momentum is quite less. And there are still call writers that are present at the higher levels, which is making the upside a bit capped over here. But overall, it looks like it's going to consolidate for some more time, and 1570 would be an important support to watch out for this one.
Okay, HDFC Bank, Kunal, it's been a stock which you've suggested ought to be one of the stocks of this year within the private banking pack. But we had a CLSA note as well this morning, and that was the peg. And you know about that stock was up 1%, but you're seeing the weakness very, very visible on this counter. How confident are you of the kind of breakout that we can expect on an HDFC Bank, in your opinion?
See, of course, after the recent selling into the stock price, it will take some time for the stock to come back into a V-shaped recovery. And HDFC Bank is not that kind of a stock which goes into a V-shaped recovery. We've not seen that happening at least over the last couple of years for the stock price, except for maybe an intraday kind of a move for the stock. But then I think you have to also understand that this has been a stock which has largely underperformed for the last 3 to 4 years. And if the bank Nifty continues to look strong, there has to be a point where many of these underperforming or left behind, if I can speak so, private sector banking names, they can make a very strong comeback. So the idea is, to bet on the private sector banking names, not just HDFC Bank, but even case in point, ICICI Bank, Kotak Bank, Axis Bank, maybe even an IndusInd Bank. I think the stock is looking quite ripe for a fresh breakout on the weekly and the monthly charts. So I would believe that there could be a phase where many of these private sector banking stocks could strongly make a comeback. You'll of course have to tide over the phases where these stocks would be very volatile, prone to news flow, could go into a sharper phase of correction on a short-term basis. But that, I believe, could probably throw in a good opportunity for traders to accumulate further.
Okay, all right. Let's switch focus to the budget. Corporate India is looking to the budget for growth-friendly measures, policy clarity, and a push to revive private capex. Key asks include tax rationalization and incentives for manufacturing and exports, and continued infrastructure spending. Easing cost pressures and improving ease of doing business remain high on India Inc.'s wish list. Ashesha joins in with all that India Inc. wants.
Well, yes, so the union budget is round the corner. So let's take you through India Inc.'s wish list for Union Budget 2026. And let's start off with two sectors which have been impacted the most on account of tariffs that were levied by US government and Trump administration in August this year on India at the rate of 50%. One is textiles and the other is cut and diamond industry. That sector clearly was impacted on account of tariffs. So they are seeking financial incentive from the government to perhaps combat the impact of tariffs that have been levied. Next up, sugar. Long-standing ask from the government by the sugar sector has been with respect to MSP on sugar prices. Remember, MSP on sugar prices have not been revised since 2019. So that is one big ask from the government. And second is also with respect to ethanol prices. Ethanol prices too have not been revised for the last 2 to 3 odd years. So that is one revision that the sugar industry is seeking from the government. So MSP revision and long-term clarity on sugar and ethanol prices is the ask of the sugar industry. Let's also put the spotlight on some other sectors then. Cement. They clearly are asking for focus on infra development, rural economy and affordable housing. Remember, infra and housing total contribute nearly 60 to 70% of cement demand in the domestic market. So clearly, government's focus on infra, economy and housing will aid the cement sector. Let's also talk about a couple of other sectors which will be in the spotlight, and the other one is aviation. The aviation industry is seeking setting up new airports, expanding existing capabilities and capacities at the existing airport, and that will be a big positive for India's aviation sector. That, of course, is a duopoly market at the moment, but of course all eyes will be on any kind of developments within the aviation sector. Commercial vehicle then, support to retire older vehicles which will drive replacement demand for the commercial vehicle segment. They are also seeking higher rural income levels which will perhaps aid light commercial vehicle demand, and that is one demand that the commercial and the auto segment is seeking from the government. Let's talk about the next sector then, and that is the alcohol beverage industry. Remember, state-specific taxes and regulatory concerns is a big problem for the alcohol beverage industry. So they are seeking harmonized state-level regulations, unified national excise norms. So any kind of unification with respect to excise norms that can be unified across the country will be a big positive for the entire alcohol beverage industry. Lastly, let's talk about the pharmaceutical sector and the healthcare sector. They are seeking PLI expansion, GST 2.0 on key raw materials, especially with respect to inverted duty structure, which is a problem for the pharma sector. Restoration of tax SOPs on research and development will also be a key positive. So these are some of the expectations, some of the asks from the government. We put the spotlight on several sectors and India Inc.'s wish list for Union Budget 2026.
Okay, thank you so much for that, Ashesha. That's, of course, the union budget. One of the stocks, in fact, which will be in focus as part of the likely budget or a beneficiary of the budget proposals would be L&T, but the stock is languishing in trade today. Shivangi, what's the call with regard to an L&T? Is this a buy on dips and therefore the kind of stock fall that we've seen, 3% lower today, is it an opportunity?
Nifty has been one of the strongest stocks in this entire rally last year that we've seen, and it has actually performed quite well. even though it has been facing some bit of profit taking from the last 4 trading sessions, it has actually broken its important support levels on the weekly basis, which is why it might take a little time to stabilize. But once it kind of crosses 39.50 levels, then it would definitely be a good time to accumulate.
Okay, so that's one of the stocks which are buzzing in trade. Ambrish, from a fundamental perspective, LNT at 3,900 apiece, is this a good time, a good chance to buy LNT?
Yeah, surely. I mean, we've seen a good move in LNT, and after that, we've seen this correction. I think basically because of two reasons. One is the talk of quit the project scrapping or rebidding, where I think LNT was L1. So I think that is what is hurting the sentiment today. And in the last 2, 3 days, we've been hearing about government allowing Chinese companies to bid for projects here. So I think that's also playing out on LNT. But then I would say that if it corrects some more from here, I think it's a good level to start buying from a long-term perspective. Because whatever said and done, you see the order book for L&T, clear visibility is there. And there's no way this company can underperform. We've seen that in the past also. So I think possibly on the next 4 or 5% correction, one should be looking to buy.
Now, let me talk about red tape for just a moment. Sources have told your channel that red tape has sought buyers as founders eye a stake sale worth $509 million, which is roughly 4,000 crore rupees. In terms of the stake of the current promoters, it's at around 71%. It's a 6,500, 6,600 crore odd market capitalization, and therefore the 71% should be a 3/4 stake, which is roughly in line with that $500 million valuation. In terms of the Red Tape's founding family, they've appointed Ernst & Young as financial advisor for the stake divestment, and Red Tape's founders have reached out to Blackstone, KKR, to invite interest of this stake. Now, not sure how this is likely to play out, but you can see the sharp spike on the stock price of a Red Tape as a result. This footwear industry, Ambrish, does it interest you at all?
Not really at this point of time. I mean, although we are talking of consumption, but then we have seen most of these footwear industry languishing. I think the top one is Bata, which has been languishing for too long a time. Red Tape, clearly because of all this news, possibly it can move, but overall I would avoid.
Okay. On charts at all, Kunal? Just trying my luck.
Nothing as such. I mean, Bata is an underperformer. I think Red Tape, I don't track it, so I'll skip that. But nothing major on the charts, which probably warrants any kind of a major interest over here, unless there is any kind of a sustained turnaround which we see. But I think even that happens, the stock prices have to probably rally by at least another 15 to 20% for these stocks to come back into any kind of a breakout, even if it's on a short-term time scale.
BSE, Kunal, how interesting does that chart look to you?
Yeah, this is very interesting because the stock, I think, if I'm not wrong, even yesterday, the stock was up a couple of percentage points, 2 or 3 percentage points yesterday, and that were at a point when the markets were supremely volatile. Yesterday, and the stock was trading into its own zone on the higher side. Today, also, the stock has managed to carry forward the momentum on the higher side. It's broken past about the 2,800 levels back again. Very close towards its recent swing highs. So the chart patterns look very attractive for BSE, and this generally indicates that we are now looking at a point where the stock would come back into momentum of its own. 3,000, 3,200 could be a potential target range for the near term for BSE.
Okay, so that's the take with regard to a BSE. I'm just going to try and quickly pull out some sectors which are doing okay. The Nifty PSU Bank is seeing a further spike, but the Nifty IT index is what's really standing out to me. Now, from that absolute flat line, the Nifty IT index has seen a bit of a surge, if I can call it that. 0.6% higher on the Nifty IT index. Shivangi, anything within IT that you're liking?
So definitely IT has kind of gained a lot of attention of lately. But there are stocks which have been quite lackluster for a long period of time, and they are kind of gaining attraction at these levels. And there is a bottoming out structure in most of them, but then again, follow up is required massively in this entire space for it to cross and hold the important key levels. So IT would be a little wait and watch as of now for me.
A bit of a wait and watch. Okay. Ambrish, Realty, the numbers look weaker than what one would anticipate. And the kind of surge that we expected in FY26, well, we're still waiting for that. Q1, Q2 was soft overall as well. I know a couple of names would have done well, but outside of that, I'm talking about the larger universe. Are we seeing a slowdown? Is the cycle turning a corner? How should one look at that?
See, basically, what pushed the realty pack up was the sort of sales which we saw for premium housing in calendar year 2025. But then towards the end of 2025, we started seeing a bit of a slowdown in that space, build-up of inventory. I think that's going to continue for a while longer. But then the way I see it is 2026, maybe in the second half, we should see the affordable housing space again picking up, which has been lying low for too long. I think the last 1.5, 2 years has been slow for affordable housing. But that space, I think, should pick up over the next 2 quarters. So companies with possibly affordable housing, a larger portfolio of affordable housing, I think those are the stocks to be looked at.
Okay. All right. What we'll do is we'll wind down for the day. Shivangi, Ambrish, thank you so much for joining us. It was a packed show and it was a pleasure having you here. And we'll go across to Snehi, who's joining us with regard to the wrap for the day.
Well, yes, so let's take a look at how today has panned out. It was volatile. We've seen some pockets of green in the market, but nonetheless, overall on the Nifty 50 front, we're ending with cuts of about 0.2%, 25,750. We've not been able to hold on to that mark today. So yes, that's the take on the Nifty. Similar cut coming in on the Sensex. And Nifty Bank has been rather resilient. 0.2% uptick coming in. Yes, profit taking on the Nifty Bank seen too. But then you had certain triggers that we'll be talking about that did very well for the Nifty Bank. The advance decline ratio right now absolutely at the midday mark. It was favoring the advances so far, but now it has skewed towards the declines. And the broader end of the market, the Nifty mid cap has recovered, has done pretty okay for itself. No complaints over there, but it's a small cap index that has done very well for itself. 0.6% uptick coming in on the flip side. So you have the broader markets that have been very volatile, but it's the smaller cap names that have done very well in trade today. Let's take a look at sectorally what has been the case for the market today. It's Nifty PSU banks led by Maharashtra Bank on the back of good earnings. Union Bank, SBI, Central Bank, all of these have done well. In fact, Union Bank doing well ahead of its earnings tomorrow. This was followed by Nifty IT, Metal, Nifty Bank, and everything else has closed in the red. Nifty Energy, Nifty Auto, FMCG have seen cuts of about 2 to 0.3%, but the bigger cut has come in on Nifty Pharma and Realty. Realty continues to be a loser for the second straight day. The top loser, that is 0.7% cut coming in on Nifty Realty with names like Godrej Properties, Brigades, DLF, Sobha, Signature, Global, Lodha, all of them are deeply under pressure. From the broader end of the market, from the smaller cap names, in fact, what has done well is a Dixon, a 5% uptick over there, looking very good. Overall, it's named a 5% cut on Dixon, sorry, so that's looking bad. On the flip side, you have Autumn Investment up 8.25%. There's a bonus issue adjustment over there, so that stock has done well. Red Tape has surged 15% on the back of news to agencies that their owners are looking to pair stake. You have Maharashtra Scooters, PVR Inox, City Union Bank, Oil India, all of them have done well. On the flip side, AU Small Finance Bank, Trent, L&T, Godrej Property, Solar Industries and Dixon are some of your top losers from the broader end of the market. So yes, that is how we're culminating for the day. Almost a 0.3% cut coming in on the Nifty 50. 25,700 is where we are at, slightly above that. But Harsh, back to you in the studio.
Thank you so much for that, Snehi. Kunal, how would you assess the day? Another tough day of trade, you reckon?
Yeah, tough day. Difficult to trade these kind of days. But then there are days where you have to adhere to discipline. You have to ensure that you don't trade excessively. The principles of over trading, etc. I think all of that comes into play. You can't have all days in the same in the same manner as such. Yesterday was a day where the markets were extremely volatile the first hour or so, and then recovered. Today was a day which was different. The markets opened with a slight bit of a gap up, gave its way on the downside, but then we recovered at the fag end. So, but then I think to put this into context, Reliance was down 2.5%. It was, I think, around contributing 45-50 points on the negative side. L&T another 30-35 points. Now, if you add these two stocks up, you're looking at Nifty down by 75 points, which it ended, I think, at 75-80 points. So, which means all of the other stocks have started to balance out and try and indicate that we are looking at the index settling on at the current range. There could be stock-specific volatility which could happen in the Nifty 50 basket, but I think largely we should hold on to this range of 25,500 to 26,000.
58 points is what we've closed lower by, and 71 points is what Reliance and L&T have contributed.
Exactly.
71 negative points. So yes, that's the point that Kunal is trying to make. The positive contributors, ICICI Bank, Eternal, SBI were the three big ones at least, which helped markets stand their ground on a day like this. But out of time on this edition of Closing Trades. Kunal, thank you so much for joining us. And viewers, from myself and everyone who puts this show together, thanks so much for watching.
Presented by Ageas Federal Life Insurance, हर वादा मुमकिन. In association with SBI, the banker to every Indian truly.
Keep Grizzly with you? When they say business, they mean business. That's Air India now.
Anytime is a good time for multi-asset allocation funds. Invest in equity, fixed income, gold, silver through one fund.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
एक्स्ट्रा सेव और सेव सेव और डालो ना.
सेव से इतना प्यार
कौन सेव?
तो फ्लिपकार्ट रिपब्लिक डे सेल पे सेव करो.
देखिए आप तो राजा हैं, बस एक आवाज लगाई और सारे काम हो जाते हैं.